Okay, Jonathan Barratt is ready. Back to what we need to focus on, which is today, tomorrow, this week, next week, and this morning. And Jonathan, crude is, sitting in India, I think I can only say thank you, OPEC. But why has OPEC decided to cut production at a time when we know, increase production at a time when we know that crude prices are low and Russian oil will hit the market soon?
Look, I think it's quite interesting that they would actually do that, considering that oil prices were already on a bit of a slide. Secondly, when you see that the chances that the economy is starting to turn and soften. So it seems to me as being a little bit odd for OPEC to actually decide, to increase supply. And remember, we're looking at 2.2 million barrels by November. So whether or not they're just trying to get it out, or whether or not a lot of the members actually need cash flow at the moment, which is also a very critical thing. So I get a sense that prices are under pressure. I think OPEC in themselves have made a decision because they actually need US dollars, and as a result of that, I think you'll see oil prices under quite a bit of pressure.
Next, for oil prices now, if trade deals are in place, that means the world will not contract as it was anticipated or expected, let's say 3-4 weeks ago. So after this production increase and with hopes of tariff deals around the corner, do you think crude has hit what could be called as a long-term bottom?
Look, I think it's, in my mind, it's right at an area of very good support. Now, we don't want to revisit the 2020 April sell-off that we had, where prices absolutely collapsed due to the prospects of oversupply. So we don't want to look at that, but we are right at support at the moment. And I think when we start to digest what's happening in the tariffs, what will occur, I think the market adjusting itself as to what the tariffs actually mean to the supply of these commodities. I think perhaps OPEC in themselves have said, well, okay, this is what it's going to look like. But then again, if you think that the US is obviously an exporter of oil and one of the largest producers as well, perhaps there's a little bit of tit for tat, so it's not going to worry them too much. But I do get a sense that with the price of oil where it currently is, if it does happen to break, then we've got a significant sell side to the downside, which is certainly going to be good for India.
Jonathan was just wanting to get some levels. We're already at pretty much 56 thereabouts for both Brent and NYMEX. How much more of a cool-off do you anticipate?
Look, I think if we do get below that $55 a barrel, then I think you can see considerably lower. But we're lining up to see the next 72 hours as being quite critical. Because if we do happen to get a move back above $60, then technically we know it's going to be a buy. If it breaks below 55, then chances are she goes down to 50 very quickly. Now remember, crude oil grinds to the top side, but when it starts to fall, it falls very sharply. So we could be on the precipice of another move, which actually sees it considerably lower, just through the fact that we're not seeing that economic follow through. We're not seeing the outlook in very positive for the economy. So people might just get to that sense where they say, you know what, I think crude oil is going to get lower. The lower it gets, the better off a lot of our engine rooms, the economies of the world start to move over and start to get lubricated, and then we find good support coming in.
Right, Jonathan, great to have you on the show. Thanks for talking about where crude is headed next, and that clearly is the big tailwind for India.
If you like this video, then like, share and subscribe to ET Now.